Hey Aviral, so we got a 9.5 out of 10 on our predictions for 2022. Quite amazing.
Yeah,
Let's maybe start off with the one that we were the most off on. We predicted that we'd have two times more IPOs compared to 2021.
right. Yeah, no, so I think that specifically is about tech IPOs. Obviously, overall IPOs increased, but we had expected there'll be at least 18 to 19 IPOs from tech. The reason why we had done that was there were so many companies in India like Swiggy, Farmeasy, Byju's that were planning to IPO this year. We got that prediction really wrong. Only seven or eight actually went and IPO'd. The most followed one would probably be delivery. I think the rationale for that is tech market valuations took a beating, and a lot of companies that were planning this year they didn't go ahead. I don't think we could have predicted the sudden collapse in the public equity markets. But yeah, I mean, we scored pretty low on that one. We got a 5 on 10 in my opinion.
So the next one, which we got spot on, was that D2C brands will consolidate with more than 20 acquisitions.
Yeah, in fact, there are probably more than 60 acquisitions. The rationale for this was that in 2021, late 2021, a lot of roll-up brands, which is companies that acquire other D2C brands, they got funded and they became unicorns. It was almost very natural for them to acquire at a very rapid clip. I think each of the large ones at least acquired more than 15, and if you add the small ones it's easily more than 60. We've not even counted the large consumer brands acquiring small ones.
Yeah, so 10 out of 10 on that one, of course. The next one, we predicted that the creator economy will see more than $100 million in funding. And I believe just
Yeah,
one
I think.
company alone got us there, right?
Yeah. So we'd actually talked about NFTs becoming really core to the creator economy, and fan clash, fan craze, now what it's called, raised 100 million alone, right? So that in itself surpassed our target. But there are a bunch of other companies which are creator-led tech platforms or pure play creator enabler tools that have raised in the last year. So you have PhysicsWala, you have Banzu, you have a couple of creator tool based companies like Rigi that have raised. And I think the passion economy did pretty well last year.
The next one, we actually gave ourselves 11 out of 10 on this one. We predicted that 2022 would have fewer unicorns than 2021, but more than 2020.
Yeah, I think the grace marks, extra grace marks we've got here is because we predicted a banded range, which is harder than just directionally saying it will be more than or less than. We said it would be sandwiched between 2020 and 2021. 2020 was 11 and 21 was 44. Um, when we entered 22, there were 14 or 15 unicorns in the first quarter, which would imply 56 to 60 unicorns in the year. I remember feeling like, man, we've got our predictions way off. But then, as we had expected, and why we predicted this was we were starting to see slowness in the market. These are things that are not available in the news, but being in the ecosystem, I think we start to see these signals, and if you pick them up, you'll be able to predict much better. And we were starting to see the signals which said that 22 will be slower than 21, which is exactly what happened. And it also slowed to a rate which was higher than 20. So I think that prediction was well steeped in logic, and it played out pretty well.
Quite an incredible prediction on that one. The next prediction that we had was that fintechs will correct from 2022 highs. Yeah, and so we got a 10 out of 10 on that one as well.
Yeah. So we saw this in EdTech, which in 2020 really blew up, and then 21 there was a consolidation, and now in 22 there's a bit of a struggle. Um, this is following the concept of booms and busts. So there's a boom bust cycle. The same thing we think happened in fintech, which was 21 was crazy, and we would expect less boom or a bust kind of situation. In fact, funding dropped by almost 40%, and a lot of M&A happened, which is why I think our prediction was correct. We had expected that most funds and most startups which had raised a lot of money would want to see and play it out over the next year, which is why funding reduced this year.
And our last prediction for 2022 was that deep tech startups will raise more than $1 billion. And we got 10 out of 10 on this one as well. It was well over $1 billion, I believe.
Yeah, I think from a deep tech definition perspective, there are major categories involved in it, but I think the largest three would be Web3 blockchain is the biggest, then followed by AI, and finally rockets and space tech. I think Web3 ended up raising 650 million last year. There were two AI unicorns, one of whom we interviewed on our podcast as well, Fractal, which alone raised 350. There's a Magi Labs, and then there were three rocket companies, Bellatrix, Skyroot, and Pixel, that did very well last year too. I think this in itself helped cross $1 billion. My sense is that the number is closer to $1.5 billion across all investments. So I think that prediction also played out properly.
So incredible. That sums up to a 9.5 out of 10 for the year. A year with a lot of madness, a lot of crazy things that were hard to predict. So let's move on to our 6 predictions for 2023. The first one is that India SaaS will be among the top 2 funded sectors with the lowest mortality rates.
Right. So before I go into that, I think on a macro level, we are expecting much more muted activity this year. The signs are there for those who are looking. The signs are not there for those who are not. I think there is some belief in the ecosystem that things will get better soon very fast. We don't believe that will happen. So my sense is the macro environment with higher interest rates, inflation, political uncertainty will continue. There's also a big reset required because 2021 was insane. There was so much money that has come into the system. And I think there will be more morbidity. There will be more deaths. The collapse of FTX is the prime example of a lot of money having come into the ecosystem and then, things going south. So you'll see a flavor of this through all our predictions. Even then, we've tried to be, optimistic in some areas which generally tend to be less sensitive to these kind of things. So SaaS is one of them, and that's why we picked it as a sector which will have low morbidity rate. We've gone very specifically with that because we're debating whether it will be the fastest growing sector, but we don't believe any sector is going to grow materially in India next year. So it would probably be the sector with the least degrowth, which means least amount of deaths and, probably maintain where it is. Our expectation is it would probably end up in the top 2 most funded sectors. There'll be a chase for profitability. There'll be a lot of consolidation. And we think SaaS is the all-weather category that does well in any environment. It doesn't go too high or go too low. It stays the course usually.
Still a bold prediction. Moving on to the second one, we would have 5 or more unicorns that will be repriced.
Yeah, I mean, I think this is a scary prediction for us as well because it's very hard to predict something like this. But our sense is out of the 60 unicorns that got created in 2021 and 22, and even ones before that, our sense is that some of them got too big too fast, and there will be some downward pressure on valuations. Now, fundamentally, what is valuation for a startup? It is a prediction of future growth potential priced at some value today, effectively, right? So future cash flows at a discount, and you sum them and you get the valuation. I think if the interest rates have increased, which means the discount has increased, the farther your profit is in the future, the lower your valuation will be. And so just by changing rates, valuations should fall materially, which we've seen in the public markets. A bunch of large public tech companies have taken a beating. Public multiples are far higher than private, far lower than private multiples. And we expect this year is going to be one of repricing. So there'll be a bunch of unicorns which are near the 1 billion mark, which will not remain there. And we will see an explicit repricing of those, which would involve a down round or repricing of valuation. We expect that to happen in the next year.
The third prediction that we had for the year was that funding will be higher than 2019, but lower than 2022, with less than 5 tech IPOs.
Yeah. This again is a sandwich one. I think we will be higher than pre-pandemic levels, which means that India has gone to a better place than what it was before the pandemic because of the lot of money that came in and unicorns that got built. My sense is that 2022, while it was slower than 21, things will be even slower in 23. So our expectation is that funding as well as activity will be closer to higher than 2019, but will definitely be lower than 22. And there's a big gap between the two. I think it's almost 10 billion. So we expect it to be in that range, just like we predicted last year on the unicorns.
Number 4 on our list is that climate tech will emerge as a strong theme with more than $100 million in VC funding.
Yeah, I think this is a bold prediction, especially for a new category which is yet to find models that will work. But I think that everyone's very clear on it being a real problem. We'd written about climate tech just a few months ago. It's a very, very big problem. It affects all of us. We think that there will be multiple companies that will build in this space. They will raise as well. We think EV will be at the forefront, but there'll be a lot of other players that will come in that are focused on solar or focused on green hydrogen, that will have the ability to raise money. I think the government has pushed a lot in terms of at least goals for the next 10 years. We're trying to become a more clean and green economy. The large conglomerates are beginning to invest very heavily, and we think the same will follow in climate tech startups. 100 million is a big ask, I think, but our sense is that there'll be some big funding rounds in this category in the next year.
Our fifth prediction is that Fintech will mature and will remain the highest VC funded sector in 2023, which means we're effectively saying Fintech will be first and SaaS will be second in 2023.
Yes, correct. I mean, I hope it doesn't become 2 and 1, but our sense is that while EdTech has had a tough time in its third year after the boom, which was 2020 boom, 21 correction, and 22 bust, we don't think the third year will be like that for FinTech. It won't just collapse, primarily because there is so much innovation that has happened, that is happening. There's a large policy framework that has come in to support fintech companies. You would have read in our India Stack piece. There's obviously UPI and Aadhaar, which are very big plays, but Sehmati and the account aggregator framework. There's also ONDC on the commerce side, which is not necessarily fintech, but our sense is there's a lot of policy help that is going to come in, which will enable the ecosystem and help it mature, become profitable, consolidate, not the sector as a whole, but we'll start seeing many companies that come out with real models, which we've not seen for the last few years.
And finally, 6 out of 6, 2 or more D2C roll-ups will consolidate in the sector's moment of reckoning.
Right. So related to our prediction last year on acquisitions did happen. But there are multiple reasons why we feel the roll-up play is overcapitalized in India. There are many roll-up companies in India that sprung up in the last 2 years, and 3 unicorns in one category, which is yet to establish a model. My sense is that it will require some consolidation to actually work out. In fact, Thrasio, on which they were based, has been struggling in the US. They actually changed their CEO. They've laid off a lot of people, and they're still figuring out a model. I think fundamentally there are some challenges with the roll-up model, primarily being around not enough targets to acquire, that being number one. Number two is, if you look at the strategy of a PNG, HUL, or any of the large conglomerates, they will play in categories where they are 1, 2, or 3. They won't play beyond that. And the reason for that, it's not profitable, it doesn't make sense, economics don't work. And so you'll never find a PNG, HUL, or an Nestle actively pursuing 4, 5, 6, 7, or even 10 as a rank in a particular category. The trouble with roll-ups is that they ended up acquiring, or they have to acquire, a lot of these 4 to 10 range or even more, because the number 1, 2, 3 are unlikely to sell. So you're kind of self-selecting into businesses that are not the best in that category and then trying to make them work. We think there are some fundamental challenges with that category. So our sense is that over this year, there'll be consolidation in the space. Perhaps one or two of them might even go under. And we are generally not very positive on how the category will evolve, given there's so much money that has already come in. I think there's more money in that system than it can absorb.
Thanks a lot, Aviral. Let's see how we do in 2023. And thank you, everyone, for tuning in. Please subscribe for some amazing content on the startup ecosystem coming up next year.